Everyone, buyer's agent Jay Pace here for the Providence Property Group New Year Market Update. Let's jump in. Happy New Year. This is the first market update for 2022. Being the start of the new year, I hope that you have your goals, plans, and actions all sorted out for this year to make it a great one. If you don't have this done yet and would like to have an obligation-free chat with our team to help you turn these goals into a reality, please contact us. In today's video, we're going to recap the performance of the year that was 2021 and then jump into the January performance numbers. We at Providence believe that 2022 is going to be a strong year for property, but for those of you who are still getting your information from the media and have doubts about the market's future, I wanted to go back in time a little bit to just see where this all kind of began. So in the height of COVID hysteria, with virtually no understanding of what a global pandemic meant for Australia, we entered the first recession Australia had experienced in 30 years. Tens of thousands of people were fleeing our country, resulting in a population shrinkage, and international border closures came after that. We had no vaccine to combat the virus, and we were not sure when one would even be available. Banks started predicting massive market crashes of up to 50% and unemployment numbers predicted to hit 10%. The world's longest recorded lockdowns and businesses forbidden to open their doors. It looked pretty bleak. I mean, even I was scared, to be honest. But like many of you, I took precautions. My wife and I gathered supplies, including a ton of toilet paper and a pallet of canned chicken soup. This definitely did alleviate much of our anxiety. So how did it work out for the nation during COVID Armageddon? Well, property prices actually increased in 2020. At Providence, we secured some of the best property that we'd ever purchased for our clients since the GFC. There are always markets within markets, and a big mistake I think that many investors make is confusing capital city returns with what's going on with certain property types in certain suburbs. It's like confusing the share price index with individual stock performance. And a market may be flat, but there's always sub-markets and properties that are growing faster or slower than average. Our job is to identify the best performers. Look at this. The Sydney market did about 2.7%, as I just showed you in the previous slide, for 2020. Look at what these local markets did though in Sydney. Some did 10 times what the headline results were. So if you did sit there and you listened to what the banks were saying and what the media was saying, etc., I guarantee you, if you let that influence you, you would have missed out on these. Within those markets listed, certain properties and property types on certain streets did even better than these numbers you're seeing right here. Some would have done worse. Not all properties in a good suburb will make a great investment property, but professional help makes a huge difference. We find and buy for clients where the growth is. What happened after that? Well, after the Australian property market avoided the crash that the experts were convinced was going to happen in 2020, they had more doom and gloom for us in 2021. And how did that work out for them? Well, we experienced the largest property boom that we've seen since the 1980s, the second largest property boom in the history of Australian property, actually. An average national increase of 22% in 2021. First place, Hobart, Tasmania, up 28%. Second place, Brisbane, Queensland, 27.4%. And third place, Sydney, New South Wales, 25.3%. Now, if these were investment properties, you're not only adding the capital growth numbers I'm showing you now, but you would add the rental return that you would get, which is obviously a percentage of the purchase price. So if we look at Brisbane and Hobart specifically here, we're looking at two capital cities where if you owned an investment property, your average return would have been over 30% in 1 year. So although Sydney came in third, it still had the most impressive dollar return out of the combined capitals. So after climbing almost $1,100 per day in 2021, Sydney house prices hit a record median of $1.6 million according to figures published by Domain. So Sydney house prices jumped by 33%, almost $400,000 increase. Now, I just want to make note, there's a difference between what the median dwelling value is versus what the house prices are and also what the unit prices are. So obviously houses performed a little bit better, almost $400,000 increase. During 2021, residential real estate increased in value by $2.2 trillion. Okay, it's now worth almost $10 trillion. And for all those people freaking out about our debt, well, our overall debt, as you can see in the top right-hand corner there, is only about 20%, which is still what experts consider to be quite healthy. Now, we look at previous performance compared to 2021 here, and I'm showing you 16 to 17, 17 to 18, 18 to 19, 19 to 20, and 20 to 21. It's very obvious that we can see that every capital city and territory was in positive in a positive territory last year. Now, if you want a breakdown of the reasons why the market wasn't going to crash during COVID-19 and what we talked about in, I think it was April or May 2020, and also why we believe that we're in for another 5 to 7 years of significant growth according to the property cycle and our interpretations of that data, check out our previous videos on our YouTube page. Now, an interesting fact is that homeowners made more money on paper in 2021 just by owning a house than Australians who went to work at a job in nearly every state and territory. So the top three increases being Sydney, Canberra, and Brisbane. Sydney homeowners specifically made 5 times more in equity than the average salary would have made you that year. According to the Australian Bureau of Statistics, the average salary is about $63,000. So 5 times that was made for people in Sydney, and a good amount of money for Brisbane and Canberra as well. No surprises here when we look at houses versus units. Houses did perform better than units as a whole. Houses achieved about a 65% higher gain. However, this is a slippery statement to make, all right? Remember that 99% of instances, location is the main driver of growth. Location, not property type. I'd rather have a smaller property like a townhouse or maybe even a unit in a greater location than have a large block of land in an inferior location. And just look at that yourself. Jump on domainrealestate.com, look at a superior suburb, look at what a unit or a 2-bedroom terrace home might have sold for recently, and then look at a suburb that's still a good suburb, but maybe 20, 30 kilometers from the CBD, and look at what 800 square meter blocks are selling for today. Performance is very, very obvious there. There are suburbs in our country where apartments can sell for $20 million. That is proof that it's not about the property type. It is about the location. Let me be clear. We prefer to buy properties that have good land content, and being able to add some value by doing a subdivision, a granny flat, etc., renovation. It's all fantastic. But if we look at certain types of units and townhouses that are worth considering, especially if your budget doesn't allow you to purchase in an area with good historical growth, you should be looking for units or townhouses that are unique, small blocks, period architecture. Owning land content is generally superior as long as the location is superior as well. Total stock advertised at the moment on the market is down 37% below the 5-year average nationally. So we expect this to increase. We're still in the beginnings of the year. Typically, we won't see this start to move up until late February, early March. Let our professional buyers agents help you. So for almost 2 decades, Providence has helped Aussies locate, assess, and negotiate their ideal home or investment Australia-wide. Stop procrastinating. Contact us today. I want to thank you for your time, and I will see you all next month.